Welcome to the WASP Network. Please subscribe to our channel for Wall Street updates and stock market daily picks to create passive income. Our goal is for you to be in perfect health while creating income so you can live life free. Today's market action was one for the books. We opened the day in the red, and fears were high, especially after the news broke that China had officially announced a reciprocal tariff on key U.S. goods. This was expected to shake up global markets, and at first, it absolutely did. Early morning trading saw major indexes dip, with uncertainty clouding investor decisions. But in a surprising and rather inspiring move, the market didn't stay down for long. By midday, sentiment began to shift. Investors appeared to shrug off the noise and focus on the fundamentals. Major indices, including the S&P 500, turned positive by afternoon trading. This rebound shows resilience in the market and highlights something even more important for long-term investors, a key opportunity. And that brings me to the main topic of today's video: why now might be the best time to build your foundation in the SPY ETF, even if you're a dividend investor like me. Let's talk about it. As a dividend investor, my strategy has always been built on consistency, cash flow, and long-term value. I'm a big fan of companies that reward shareholders with dividends and show financial strength. But there's one ETF that I believe should be part of every investor's portfolio, regardless of your style, and that's SPY. SPY tracks the S&P 500, which means you get exposure to 500 of the largest, most established companies in the United States. We're talking about names like Apple, Microsoft, Amazon, Johnson & Johnson, JP Morgan Chase, just to name a few. These companies drive the US economy, and owning SPY gives you a piece of all of them in one simple, powerful ETF. Now, here's where a lot of dividend investors make a mistake: they ignore SPY because it doesn't have a sky-high yield. But that's short-sighted. Because what SPY offers goes beyond just dividends. It provides growth, diversification, stability, and yes, a modest, but reliable dividend yield that historically grows over time. Let's break this down a bit more. Imagine your stock portfolio is like a house. Every house needs a strong foundation. You don't build your house starting with fancy furniture or decoration. You start with a basement. A solid, reliable, grounded base that holds everything else in place. That's SPY. Your dividend stocks might be your living room, your kitchen, your bedroom. Maybe you've got a few speculative growth stocks, that's your home office or entertainment room. But SPY? SPY is your basement. That's where your furnace lives. Your water heater. Your electrical panel. It's not the most glamorous part of the house, but without it, nothing runs. SPY keeps your portfolio running. It offers broad exposure to the most important sectors of the economy: tech, healthcare, financials, consumer goods. It smooths out your risk. It performs over time. And it delivers a reliable dividend, which might not be high, but is very consistent. Let's return to what happened in the market today. Despite a very real macroeconomic threat, a reciprocal tariff from China, investors didn't panic. They bought the dip. Why? Because they trust the strength of US companies and the market as a whole. And when you want to invest in that kind of strength, SPY is your vehicle. With market volatility creating opportunities, this could be an ideal entry point. Buying SPY during uncertainty often results in long-term gains. You're not trying to time the bottom. You're trying to accumulate wealth with a steady, proven asset. Let's take a quick look at performance. Over the past 10 years, SPY has delivered an average annual return of about 10%, and that includes dividends. When reinvested, those dividends help compound your gains even faster. If you're a dividend investor, this should excite you, because it gives you both income and capital appreciation in one place. Also, SPY's dividend yield typically ranges between 1.3% and 2%. That may sound modest, but it grows, and more importantly, it's backed by the earnings power of 500 companies. That's dependable. SPY is also highly liquid, meaning you can buy and sell it easily, with tight bid-ask spreads. It's also tax efficient compared to actively managed funds. That's something most investors overlook. Over time, those small efficiencies can lead to better after-tax returns. As a dividend investor, you might like to pick individual stocks. I do too. But let me ask you, how many earnings calls can you listen to? How many balance sheets can you analyze? How sure are you that your pick won't cut its dividend? With SPY, you don't have to worry about that. Even if a company within the index falters, it's replaced with a stronger one. It's self-cleansing. That's why it's called a passive investment. It does the work for you. Here's how I personally use SPY. I treat it as the core. At least 40% of my total portfolio is in SPY. Around that, I build with dividend stocks, blue chips like PepsiCo, Verizon, Realty Income, and others. Then I might sprinkle in a few REITs or high-yield ETFs for income. But no matter what I do around the edges, SPY stays as my foundation. If I were to build my portfolio from scratch today, SPY would be the first asset I'd buy. Then I'd start layering on other dividend plays. But that base? That stable, diversified, high-performing ETF, that comes first. Take a look at almost any 401k, and you'll find exposure to the S&P 500. That's not by accident. Financial advisors and retirement planners recommend it because it works. It has decades of history. It has resilience. It bounces back from downturns. It builds wealth slowly, steadily, and reliably. And when you're in retirement, or approaching retirement, what do you need most? Reliability. SPY gives you that. You can keep a portion in it even as you get more conservative. It continues to pay dividends. It continues to track the biggest companies. And it continues to anchor your portfolio through good times and bad. To wrap this up, today's market rebound was a reminder that the long game always wins. Volatility is part of the process. Tariffs, politics, global news, they come and go. But the companies in the S&P 500 endure. And SPY gives you a seat at the table. So even if you're a dividend investor, don't overlook SPY. It might not have the flashiest yield, but it's got everything you need to build and protect wealth over time. Think of it as the basement of your financial house, quiet, stable, essential. And when the market wobbles, like it did today, you'll be glad that your foundation is strong. Thanks for watching. Don't forget to like, subscribe, and drop a comment below if you want me to dive deeper into portfolio building or break down more dividend ETFs that can work alongside SPY. See you in the next video.